Is Joel Griffith, research fellow in the Rowe Institute at the Heritage Foundation. Joe, welcome. As you just heard, a little bit of sour news that Matt ended with Meta. Beyond the big takeaways, though, inflation remains high, especially in the services sector. Joel, do you see any positive signs from this latest inflation report?
No, there's very little positive in here. In fact, what we saw is that year over year, real wages declined for a record 23 months in a row. So pretty much the entirety of the Biden presidency, we have seen year over year wage decreases. And that's because, as we've all felt, the cost of living continues to rise more rapidly than our paychecks are rising. And I think it's important to note here that blame does not lie entirely with President Biden, although he has been an abject failure in terms of economic performance. But this goes back now 3 years, and Republicans and Democrats in Congress passed massive spending bills to distribute money across the country. President Trump signed those measures into law, and the central bank printed the money to buy up the government debt to make it possible. We are reaping what we have sown over the past 3 years.
Joel, Moody's today cut its outlook on the U.S. banking system to negative. This after the collapse of Silicon Valley Bank and the smaller Signature Bank over the weekend. Is this indicative of a more widespread financial weakness in the system?
Oh, the financial weakness in the banks goes far beyond the woke capitalists at SVB and at SBNY. And here's what's happened. You had trillions of dollars worth of new deposits that were put on hand at these banks, courtesy of the Fed printing all of that money. And the banks went ahead and bought a lot of long-term government debt. Now, as interest rates rise, the value of that long-term debt at those lower interest rates declines. Now, all is well and good until depositors want their money back. Well, if depositors want that money back, that means that those banking institutions need to cash in their investments at a loss. And that's what sparked the bank run over the last weekend. But this goes far beyond just those two banks, because you have banks across the country that have put those deposit dollars in those longer term investments, and those investments have lost value over the past few years. And now you heard from the Fed chair, now the Fed is basically promising to bail out not just these depositors who would have lost their money, but they're basically bailing out future banks as well, because they're offering these very generous loan terms in exchange for the banks putting up those losing investments as collateral. It's a bailout for those depositors, and now it's a bailout for banks across the country.
All right, we have to leave it there. Joel Griffith with the Heritage Foundation. Thank you, Joel.
Thank you.